All right. Hey, everybody. I'm Jeff Gibby with Metastock and the Traders Forum. We're joined today with Jarratt Davis. And I spelled your name right, Jarratt, right?
You did, actually. Yeah, you did.
Okay,
To be fair.
I always get
Bonus
confused
points for that.
whether A's or E's or how that works together. All right. We're here with Jarratt Davis. We're going to do a little bit of a ticker talk. Before we get started, I want to do a legal disclaimer because it keeps our attorneys happy. So today's demonstration is designed to instruct you in using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell any securities, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading securities. Metastock, the Traders Forum LLC, and their employees and guests disclaim all liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the companies. Metastock, the Traders Forum LLC, and their employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. All right. In case you haven't been to a ticker talk before, welcome. Thanks for watching. Thanks for joining us today. This is a bit of a longer form discussion. It's more of an interview where we kind of just talk a little bit about how we got into trading and, the methods, the strategies we use, advice that we might have for new traders. It's a bit of a longer form discussion, and I hope you enjoy it. If you're watching this on YouTube and you haven't become a part of the Traders Forum community before, go to thetradersforum.com. There you can chat with traders. There's lessons. We do events like this. We do all kinds of things up there. And it's all free. It's a community of traders designed to help other traders. So there you go. Jarratt, that's the intro.
Good intro.
In any case, I'm going to go ahead and stop sharing the screen real quick. Otherwise, it just stays there. I had said this right before we started the live, but congratulations for getting your Christmas tree up. Happy holidays.
Thank you.
Let's see. You have kids. Do they still believe?
Yeah, they do. They're 3 and 4. Yeah, they're 3 and 4, so they very much believe, and that's actually the main reason why we have to get the tree up 1st December.
All right,
Christmas spirit. Yeah, they couldn't wait to get it down. So
very cool. Now you're joining us from London, or from not London, but from the UK.
UK. Yeah, not far from London. I'm actually in the middle, so it's a place called Staffordshire, which is kind of right in the middle of the UK. It's like an hour from London on the train, an hour and a half.
Okay, cool. Now you're a little bit different from kind of usually a lot of the people that we're usually talking to are kind of very much into technical analysis. Your investment style, from what I gather, and we'll talk more about it as we go, is quite different. Would you consider? Do you use any technicals in what you do?
I'm mostly fundamental driven. I do use technicals in the sense that when obviously we'll get into this a bit more deeper in a while, but when I'm looking at a stock to buy, because I'm looking for undervalued stocks relative to the business value, I want to see the price I want to see a price that's been sold off, because that tells me that the market's paying attention to the value on some level. And it tells me that the market's previously priced that business higher. So that gives me comfort and conviction that the price, if the business resolves its issues, that the price will get back there. What I don't like to see is sometimes you find a business that's really cheap and it's kind of just stayed at the same price for so many years. That tells me that the market's kind of aware of it and is pricing in some extra risk that I might have missed. So there is a technical element to it, but I would say that's probably like 1% of what I do. Yeah, so I'm probably a bit of a niche.
Very cool. When I'm going to read your bio out loud. So, Jarratt Davis is a UK-based professional investor. He focuses primarily on the business-like investment approach and searches for stocks that are priced significantly below intrinsic value of the underlying business. So, I'm kind of curious. I know that you do a lot of work as jarrattdavis.com. What is a good place? I mean, I usually start with this. where's a good place people can kind of find out more about what you're doing or track your work? What's a good place where people can get in touch with you?
Yeah, so the business investing is in two parts. So I actually do whole business acquisition. So I buy whole small
Okay.
businesses. So that's a website called asac.group, asac.group. That's probably more for a UK audience, but that's kind of where you can get in touch there. I also have an FCA regulated investment program, which I
Okay.
work with. So we work with an investment firm in the UK, and they basically allow me to offer my portfolio as a product to investors,
Okay.
which is kind of probably more of a, so if someone's interested in investing in the style of approach I use with me, then that's also an option that they can attract. And the best place to find everything is, like you say, jarrattdavis.com. That's my personal website. Everything I'm doing, I just link from there, basically. But those are the two main ways to work with me. You can either sell me your business or invest with me through the managed account program.
Now, when you talk about special business or small business acquisition, about how, like, give me an idea of kind of like how many small businesses are you buying?
Yeah, I mean, it's not like you're buying and selling 100 a week or anything like that. Obviously, it's a very laborious, time-consuming process. First of all, to kind of
Sure.
negotiate that deal. So over the years, I've probably been involved with about 6 full, complete acquisition, buying and selling of the businesses. And my first one was back in 2006.
Okay.
So I actually built a business, a commercial cleaning business, incidentally. I built that business up and then sold it in 2006. And then I've kind of done it over the years, built business, because obviously it takes a while to build the business and, turn
Yeah,
things
absolutely.
around. And then the most recent one at the time of this recording, I sold a software business in 2023, end of 2023. So just last year.
Mhm.
So it's not like a high volume thing, but
Sure.
it's just kind of something that kind of is an ongoing process.
So now when you buy how many total do you think you've done?
Yeah, 6 is the total
Okay,
over the
6.
years,
Okay.
basically.
And how long have you been doing that for?
So, like consciously since about
Okay.
2021.
All right.
But like I say, I built and sold my first one back in 2006. But I started consciously doing it because I kind of realized that business is what I enjoy. Business is my real passion.
Mhm.
So consciously I set up to start doing that kind of back end of 2021. But obviously we had COVID, so it didn't really kick off till 22.
Sure.
And that's the kind of timeline of it, really.
So when you buy a business, I think let me just kind of see if I have it straight in my head. When you buy a business, you're like, okay, well, they have a good model, but the business isn't being run very well. I'm going to buy it, take it under management, turn it around a little bit, and then sell it a little bit later. Is that right?
Well, yeah. So I focus on what I call special situations.
Okay.
So normally, if you've got a successful business owner that's got a really healthy, good cash flowing business, they probably generally don't want to sell
Sure.
unless you're going to offer them an amount of money that makes it not worth buying because you're
Mhm.
paying too much. So that's the general. So everyone will say they're interested in selling their business, right? But there's only a small minority of people that are actually desire a sale more
Okay.
than anything. And
Right.
so I'm looking for those special situations where they want to sell. Maybe they're retiring, but they don't just want to sell to anyone. They want to make sure that the business is going to continue. The culture is going to continue. The customers are going to get looked after. The staff are going to get looked after. So maybe they don't want to sell to a private equity firm that's going to come and strip it all away and do what they want to do with it. Or it could be, like you say, the business is in distress and it
Mhm.
needs a turnaround, but maybe the owner's coming up to retirement, it's just tired, doesn't want to do that, but doesn't want to let it go down the drain for nothing. Because it's special situation, each
It's
scenario is
always
always
unique.
unique. Yeah.
Yeah. Okay.
But generally there's always an issue and there's always something to do, basically, I would say,
Okay.
or something to improve.
So when you said you just sold one in 2023, does
Yeah.
that mean you're actively hunting for one?
Yeah, I'm always actively hunting.
Okay.
We're always open to doing it. But because it's special situation, like the criteria we look for, we obviously want to make sure that it's something in our competence that we can do, you can deal with, it's something we can help with, and also that the deal's got to be right. I mean, ultimately, it all comes down to how you structure and price. How much you're paying and what you're getting, and then how much work is it going to be, and have you got the competence to carry that out? So there might be like hundreds of thousands of small businesses, but in reality, it's only going to be a very small handful of opportunities that come along every year or two that really kind of meet
Sure.
the
Yeah. Yeah.
criteria. So yeah, for that reason, you've always got to be open, and we're always having conversations and kind of keeping our ear to the ground.
What's the maximum amount of businesses that you've had vis-a-vis this process at a time? Has it always been just one, or has it been a couple?
Yeah. So I mean, there was a point where we had two,
Okay.
um, and that kind of got a bit hectic, you know, because you
Mhm.
kind of, because they're small businesses, they require headspace. Even if you've got a management team running it, you still require headspace to think about what you need to do next and what needs to go into it. So I really try and keep it as simple as possible. So I'll try and do one deal at a time. I mean, if we get the business, this has happened before, but if we get a business where you get a really good management team and it's ticking along nicely, that's fine. We'll kind of do some other deals, but I like to generally tend to focus everything I've got on each, um, on each project, so to speak.
Okay. Yeah, for
So I
sure.
try
Yeah.
and try and limit that down,
Yeah, yeah,
basically.
yeah. I can imagine if you're trying to do too many at once, it
Yeah,
gets busy.
it's a bit hectic.
All right. So, in addition to that, kind of talk to me a little bit more about the Jarratt Davis side of kind of what you're doing.
Yeah, so I mean, really, it's the same thing, except this is
Mhm.
obviously more pertinent to the MetaStock audience. But it's the kind of structure and the valuation structure and the thought process that I use to buy a small business. I apply that to the stock market,
Mhm.
and I'm looking for exactly the same things. I'm looking for, but except with the stock market, when you're buying a small business, you're dealing with the owner, and so the
Right.
price is always going to be a difficult thing to negotiate for obvious reasons because it's their baby. Whereas on the stock market, the price of a business isn't set by the owner, right? It's set by the market. It's an
Sure.
auction-driven thing. So
Yeah.
very often you can get business, you'll get deals on the stock market that you would never get in a private owner scenario. So, like for example, you can find businesses selling for below their liquidation value, but they're perfectly healthy cash flowing businesses. So they're nowhere near being liquidated, and so the stock market is fantastic because you can get such brilliant opportunities. Obviously, the difference is that you only buy the stock, right? You're not buying the
Mhm.
whole business because they're much
Sure, sure.
bigger. And you're not going in to try and turn it around because you have to leave that to the management team. But generally, with business being what it is, the management team will figure it out. You just have to basically buy the stock, be patient, wait. When it gets figured out, the market reprices it back to where it should be based on the business value, and then you can cash out and make your profit, and then you go into the next one. So it's the same thought process. It's just slightly different operation. I just,
Yeah.
the small business gives me a bit of action, whereas the stock market is a lot it's a lot simpler really to execute that strategy.
Yeah, yeah. So when you say it's a little bit longer term, in terms of like how often are you generally holding on to a stock when you decide, hey, this stock looks undervalued? You're using. I'll get to a question here. I promise. You're using intrinsic value, right? You're looking for something that has intrinsic value where the stock isn't trading anywhere near where it should.
Correct.
Okay. Is there a
Yeah.
certain percentage that you're looking for a disparity there?
I am looking to at least double my money within 2 years on a
Okay.
stock. So
Okay.
so I'm looking for things that are quite cheap.
Okay.
Um, and I feel basically if you fill a portfolio of those, you've got a good chance of making a decent return. So I'm not kind of, if it's under 100% return potential, I kind of like, it's on the list, but
Right.
that's 100% or more, double or triple your money in 2 years. That's kind of thing opportunities I'm looking for.
Okay. Is that something that's pretty realistic, or is it just kind of a goal?
No, no. I mean, you get like you never really know where the stock price is going to go because it's kind of moves around
Sure.
everywhere.
Yeah.
But you know,
If you did, it would be way easier.
yeah, that'd be, yeah. If you've got an indicator for that, that would be great. But like very often the way it works is what you basically hold a group of them. You don't just put your money into one. You hold
Mhm.
like a group, 10 or 20.
Sure.
And then what happens then is the process becomes detached from the actual individual stocks and it becomes more of a group dynamic. So you
Mhm.
have a group of things that are priced far below their intrinsic value. The propensity is for the price not to go down because it's already stretched to the downside. The propensity is for the price to go up. So as a group, your return goes higher, even though on an individual level, some stocks might be down 30%, 40%. They might just keep going down, but you'll
Mhm.
get the odd one or two stocks that go up 100%, 200%. And as a group dynamic, your return is quite consistent and stable, I would say.
Okay. Cool. Are you like how many How many open positions do you have at any given time? How big is this group in terms of a basket?
Yeah, so I personally, there's different ways you can go, right? So there's some famous value investors, like Walter Schloss, for example. He worked with Warren Buffett, Graham Newman, and he went out when Graham Newman shut down. He went out on his own, and he was very conservative. And he kind of said, he was like, I'm not an intelligent guy. I'm not, a genius or anything like that. I just want to make money, and I don't want to lose money. And he beat the market over like a 50-year P, averaged like 20% a year over like 50 years. And all he did was he'd find something really, really cheap below liquidation value significantly. And he would have up to like 100 stocks. So he would put like 1 or 2%. Now he'd put more into like the really good opportunities because you get them occasionally. So you put more of a portfolio into those. But yeah, he would just hold a bit of everything. Whereas for me, I prefer to just focus on my best ideas and
I like that as a
keep my
strategy.
portfolio. Yeah. So I keep my portfolio capped at 20. So no less than 5% into each one. But sometimes if I had if there was a massive market crash tomorrow, and the S&P dropped like 50%, then there would be some pretty world-class businesses on sale at that price. So then I would have probably a portfolio. I don't put any more than 15%. So that would mean like 7. So my portfolio is anywhere between 7 stocks and 20 stocks, basically, depending on what kind of opportunities are around.
Makes sense. Do you, so when you initially purchase a stock, I kind of want to get a little bit more into because this is interesting to me from somebody that has a lot of experience in technicals, but not fundamentals. When you buy a stock, are you saying, okay, I'm going to hold on to this for 2 years? Or do you have a preset price target that you hope it hits and then you're going to sell it? Like kind of what are the money managements that go into that from your style?
Yeah, so so there's 2 things I'm interested in. One is obviously your potential return, but the other one is opportunity cost. So I don't want my money tied up in a stock for like 10 years because I could put it into a different stock that could go up. So
Sure.
that's why I say like 2 to 3 years is my max. So that's
Okay.
it. First of all, I define my maximum holding period about 2 or 3 years for starters. If it hasn't done anything by then, I'll probably think about switching it out or reassessing it. And yeah, that's kind of my criteria and then the other thing is I just want to, like I said before, I want to find something that's, significant. So I try and calculate what I think the value is of that business today, right? So I'm not trying to project what it's going to do in the future. I'm going to assume the earnings aren't going to grow. It's just what it is now. How much is that business worth today, right now, as it is? And then my calculation is here, and then I'll try and buy like here. And as long as that gap remains, which it can change, right? Because the business can deteriorate and the value can kind of come down like this. And at that point, you go, well, there's no upside in it for me. Or if the price goes up, and again, you've got no, there's no upside left. There's no margin of safety left. So you want to exit. So that's the first criteria. And then the time one, 2 or 3 years, is the second criteria. So whichever one of those occurs first, either your upside and margin of safety deteriorates or the time elapsed and your opportunity cost starts kicking in. That's basically how I manage that.
If the position just starts to fall against you, like let's say the price that you bought the security for, even though the intrinsic value is still up here, but that price just starts to decline, is there kind of like a stop loss that you would use to just say, okay, well, this was the wrong call, let's get out and try something else?
No, because I'm only putting about 5% of the portfolio into it. So
Okay.
essentially, for me to lose 5% of my money, the business has to go insolvent. The business has
Yeah,
to
yeah,
go
yeah.
bankrupt. So
Okay.
so to protect against that, I'm making sure that each business I invest in has more cash than debt. They are cash flowing. Like the only real risk is that they're an accounting fraud, and what I'm looking on the sheet, on the financial statements, is just a lie, basically. And
Yeah,
that's
sure.
why that's why I have a portfolio of them, because that might happen, right? So if you put all your money into one stock, it could be a fraud,
Right,
and
right.
then you lose your
No,
money.
no,
So
no, that's never happened.
yeah, well, and it
Oh
never will happen again, right?
no, no, not ever. Okay,
Yeah.
interesting.
So that's how I kind of manage that risk, basically.
Okay. So how long have you like how did you get in the markets initially? Like what kind of drew you to kind of this line of work?
So I was, like I say, I sold my first business back in 2006, and it was a commercial cleaning business. And I was just sick of being outside, and I was like, right, I want to do what. So I sold the business, and I had some debt, so I paid that off, and I was basically back to zero. So I was like,
Mhm.
okay, this is I mean, that was great, right? So I was like, right, well, I'm in this great position. I'm young, I'm still pretty young. I can do whatever I want. What do I want to do? And I was like, I want to do something online. So I started exploring that. And then the second thing was I want to be location independent. So wherever I am, I want to be able to make money on my laptop or my computer, wherever I'm living.
Mhm.
And then I really like the idea of making money from money rather than from time.
Sure.
And that concept kind of really fascinated me. Now, at that time, we're talking like almost 20 years ago, like the world was a very different place. Like smartphones didn't exist. And if you
Yeah.
want to be an investor or a trader, you have to have a certain level of capital. So, for example, if the big one with property, but if you want to buy a property, you've got to have a big deposit. You got to have you got to be able to get mortgages, or even stocks in those days. If you wanted to buy a share of a stock, a stock in a company, and the minimum share price was like $1,000, you had to have $1,000. And if you wanted to build a portfolio, you had to have lots of capital to do that.
Sure. Yeah.
So the bar was quite high. So I originally started trading currencies
Okay.
because it was the most accessible way
When you
to.
say back then, can you kind of give us an idea of when that is? Because for me, it would be like, I don't know, the 90s, like the late 90s, the early 2000s. When you say
Yeah,
back
well,
then, what was it for you?
I found currencies in like 2007, 2008.
Okay.
Well, I'd
Yeah.
say between 2006, 2008 when I kind of discovered it.
Right.
And then you kind of start playing around, but yeah, I mean, those days was like the Wild West. You probably remember.
Oh, yeah, for sure. Everybody was
The internet was,
trying to.
but by then the internet, like we in the UK, we just had things like Wi-Fi and broadband, and the internet was becoming faster, and it was becoming more of a accessible market. But it was just like, I mean, it wasn't even regulated back then. I mean, that business, I started trading money, but I eventually managed money for clients.
Mhm.
And eventually it was an FCA regulated business later on. But in the early days, I literally remember just knocking on people's doors and asking if they want a managed account.
Okay.
Like it literally wasn't a regulated activity. You couldn't do that now.
Yeah.
But yeah, it was just crazy. I mean, it was crazy times. But the fact is, it was accessible, and that's why I kind of was drawn to that industry.
So did you do a lot of trading of your own funds, or is that when you started getting money under management to trade other people's funds with the currencies?
Yeah, so at that point, I was trading my own money.
Okay.
I did well, and then I was working with people, and they kind of saw what I was doing. They put money with me, and then it just kind of grew from there. And and then after a while, I was like, I want to do this properly, and I kind of built relationships with firms and stuff like that, and introducers, and it just kind of grew over the years. Really, I knew I wanted to increase my capital, so my pitch was always like, here's where all my money was in my trading account at that point.
Mhm.
And I would just basically have a video call with a client. I'd be like, look, here's my money, here's my account. All I ask is that you put in the same as I've got in. If you lose all your money, I've lost all my money. And when you'll only make money if I make you money. I'll only make money for you if I make you money. It's
Sure.
performance fee only.
Yeah.
And that was a really great. I mean, that business just grew. I mean, I think at the peak we had about $30 million in AUM. Eventually, at the peak,
Mhm.
and but it wasn't like really a plan. It just kind of snowballed.
Right.
I think
Okay.
it helped that it was whole new thing as well. But yeah, that was
Yeah.
kind of
People loved FX back, especially in the sevens, the 2000s, the early
yeah.
2000s. Do you? I can imagine. I can imagine that you're not looking at the intrinsic value of the foreign currencies. I can imagine your strategy would have been quite different.
Well, yeah, it was quite different, but funnily enough, I was still focused on fundamentals. So I wanted to know like if a currency pair moves, I want to know why. Well, there's
Hmm.
some reason why it's moving that day, and so I really tried to kind of. The only way I really figured out how to make money from currencies was to essentially trade the expectation of the market. So just to oversimplify it, let's say the Bank of England, everyone expects the Bank of England to cut their rates at the next meeting, right?
Hmm.
So what would happen is the pound would sell off. So the market was pricing in a cut. So now what I'm doing, and now I know what the market's expecting, now I'm waiting for some breaking news or something to change that expectation. So, for example, a Bank of England member might come out and say, "Oh, actually, we're actually thinking about not cutting." Now, that's a dramatic shift from what the market's expecting.
Sure.
That's
Yeah.
something that is going to push the pound. So then I would be buying the pound, and riding that move. But that was very intense. So I was literally sitting at screens 15 hours a day. I was like, checking my positions at 3 o'clock in the morning. It was a very unhealthy lifestyle, basically.
Yeah,
But
sure.
but it was kind of a fundamental strategy because I'm kind of trying to basically play on market
Yeah,
expectations.
fundamental news driven type of strategy.
That's it. Yeah, yeah.
Maverick wants to know: do you still trade currencies?
I don't know. I
Okay.
retired from currencies in 2018.
All right. And then that was more of a just like, okay, I just want to slow these down a little bit. I don't want to be
Yeah,
up all night looking at kind of what
yeah.
they're doing and that kind of stuff. Have you ever have you ever traded Bitcoin or Ethereum, or have you done any type of coins or futures? Like what other asset classes have you traded besides stocks and currencies?
Well, when I retired from FX, I wanted something to be like trading FX drains your energy. You've got to constantly be there, and even if
Mhm.
you're making money on a trade, you're never going to make any more money again unless you get back in the saddle and start pressing the button again and watching the screens. Like it's
Mhm.
constant.
Yeah.
Whereas I wanted to kind of go to a bit more of an investing
Okay.
place.
Right.
And so I actually got into crypto back in 2017. So I've been holding Bitcoin for quite a few years. So I have some
Good
Bitcoins.
on you. Good.
Yeah, and like particularly now, like I look at it now and I'm like, you know, we're only at the beginning of mainstream adoption here.
Uh-huh.
So yeah, I'll be holding those things for at least another cycle. Because I think there's still a lot of room to the upside because there's going to be a lot more of an adoption. So yeah, crypto, like not so much the altcoins or anything like that. I do have a little bit of Ethereum, and I have one called Aave, and I have one called Chainlink, which I think are going to
Mhm.
be really cool. But my plan is, I mean, you don't know what's going to happen next, but my plan is over the next 12 months. I think that we're in the bull run. The next crypto bull run next 12 months. I plan to basically cash out everything else and put all the crypto stuff, just consolidate into Bitcoin, and then hold that for another 5 years maybe.
Okay.
So yeah, I am into that, but not as a trader. Just kind of just as a passive
Goes
holder.
along. Yeah.
Yeah.
When you were trading currencies, did you have some main pairs that you like to trade specifically?
Yeah, I mean, I guess
A
I'll
little bit
trade
of
the main. Well, I can remember. Yeah, I mean, I always say like main classic pairs like euro dollar, pound dollar. But I remember, I think it's maybe 2014. I can't remember. I think the Bank of the Russian central bank. I can't remember the exact details, but it's like 2014. The Russian central bank something like hiked their rates really unexpectedly, or something, or cut their rates unexpectedly. And I remember trading the Russian ruble against the dollar. I mean, the spread was insane, but the move was huge. But like normally, I'll just keep it to kind of safe euro dollar, pound dollar, yen pairs,
Okay.
maybe the crosses, euro yen, pound yen. But yeah, generally it was kind of like standard pairs.
Gotcha. Okay. Yeah. Looking at kind of your investment process, you said you hold stocks for a couple of years. Usually 2 to 3 years is kind of the max cutoff. How long does it take you to, like, how much of like a given day is devoted to looking at stocks and identifying new opportunities versus managing your, like, how busy are you when you're trading?
I mean, the managing the portfolio is not busy. I mean, I check it every day.
Hmm.
But basically, with that, you get in your position, you've got a price. The only work to do is to make sure you have to. Obviously, every business releases quarterly earnings, so you
Hmm.
check the balance sheet, you check the trailing 12-month free cash flow, or whatever, and you just want to make sure that the intrinsic value is not coming down, basically, versus where you paid. So you keep tabs of that, which takes probably an hour a week on average, um, and then you want to maybe manage it. So the other thing about holding a portfolio of stocks, you get dividends. So what you find is a bit of a weird scenario, but you have this portfolio and you just get cash building up in the portfolio.
Hmm.
Um, and you've got to do something with that cash. So then the next question is, well, how am I going to distribute that cash in the portfolio? So for me, I'll just put the cash into the stocks that have gone down the most, because then
Okay.
my average price is coming down. So that when they recover, obviously I make more money. So there's a bit of management to do, but it's literally like an hour or two a week in terms of managing the portfolio. But the research can be, anything from 5 hours a week to 30 hours a week, depending on how really deep you want to get. Um, but I obviously I've built some software that helps me scan. So every weekend it scans like 40,000 stocks globally, and it
Yeah.
just brings back the ones that meet my criteria. So that saves me probably hours and hours a week just of scanning. And I use Chat GPT. I mean, everyone's using Chat GPT, but you can research a business. You can upload the financial statements,
I
ask
was
it questions.
You
It's
said that, and
just
I remembered somebody talking about uploading the financial statements to ChatGPT and
yeah,
kind of having it analyze it for it.
it's huge. I mean, it saves me like I mean, it might take me 4 or 5 hours to analyze a business, research it. With ChatGPT, it takes me like half an hour, maybe even 15
Okay.
minutes, because you just there's the information. Tell me this, tell me that. Now, I'll obviously still read the annual report after just to make sure,
Yeah,
but
yeah.
generally, it's So
Yeah,
yeah,
yeah, yeah.
it's not much work to be fair.
Cool. Have you ever found that when you kind of double check ChatGPT that was completely different, like it had
Yeah,
messed up in a huge
yeah,
way?
yeah, yeah. Have to. You always have to double check because ChatGPT does hallucinate sometimes.
Yeah, yeah, yeah.
Um,
I've had that same experience where you're like, "This doesn't make any sense. What are you telling me?"
yeah,
Yeah. Okay.
and then you go like that. You'll say like that doesn't make any sense, and it'll go, "Oh yeah, you're correct. That doesn't make any sense." You're like, "Oh, why did you say it then?" So yeah, so the way I do it is reverse research. So I'll get ChatGPT to do the analysis, and
Mhm,
then I'll focus on the points that are drawing me to this stock. So the reasons why it's cheap in the first place, what's going wrong with the business, because there's always an uncertainty,
mhm,
and then what's the management team doing about it. Um, those core things, and then I'll then go and check that myself using like company information, website, Google, and I'll just confirm that those things are true. And if it all adds up, then obviously you've got a great investment opportunity. But yeah, you do need to double check.
What do you, where why do you think you kinda gravitated to fundamental analysis when you started doing this? Is there some kind of a book that you read? If somebody wanted to learn more about fundamental analysis, kind of like where would they go? Like, because I could very easily tell you how I got into technical analysis. I started work at Metastock, right? Like, and so
Oh yeah.
yeah. How was it for you that you kind of got interested in fundamentals initially, and kind of that's kind of the approach you decided to take?
Well, I started with technicals. Obviously, I mean everyone starts with technicals.
Okay.
I think that's the starting point for everyone. And I just remember, like, how can I put this? When you when this is for me, when I was trading technicals, it seemed like I could. There's two things. One, it was like there are people doing this professionally. They're like big banks and firms making lots of money at this,
Mhm.
and they must have like a framework and a process. So the
Okay.
guy comes at his desk and he almost like a checklist. He follows a process to make money because
Mhm.
it can't be so chaotic where one day you're down. Like you can't build a firm like that. So I was always like, there must be something I'm missing here. And then secondly, the other thing that really frustrated me was like if any other profession in the world, if I want to be a doctor, if I want to be a lawyer, if I want to be a brain surgeon, whatever it is, there is a process to doing that thing, right?
Right.
So
Mhm.
I can then use that framework, and then the harder I work, the more money I make. But it was always frustrating to me with trading. That was never the case. Like I could put in like 60 hours a week of work and lose money. And it's just like there's something intrinsically irrational and frustrating for me personally about that, just that possibility.
Mhm.
So when you go towards the fundamentals, it's just a very rational. Um, if you're buying, for example, like now, if you're buying a business for like that's trading 25% of its tangible book value, for example, that stock price is not. I mean, it can go down a bit more, but it's not going to go to zero. It's not going to keep going down unless the business becomes insolvent, and there's things you can do to check against that. So the further the price goes, the more likely it's to come back.
Mhm.
Um, it's just rational because it's based on the value of the business that you're buying. So I think it's that rationality and that structure and that kind of reliable framework really that kind of gravitated me towards the fundamental side of things. If I had to
On
kind of
the
sum it up,
fundamental scanner that you talked about building,
yeah,
you run it every week, every weekend. You said, right?
yeah, when the markets close,
How many stocks actually hit the criteria on a standard week that you have it programmed in there?
I'd say like five.
Okay, so it's not
Some
a huge.
weeks more, some weeks zero, but about handful, a small handful every
Okay,
week to look at,
of
and
those
then
five,
yeah,
on an average, I'm sure that you look at them in a lot more detail. On an average week, do you end up buying five of them? Do you buy one of them? Or sometimes you just throw them all out. Like, give me an idea of how much more selection is done after that.
yeah, I would say probably 90% of the time you throw them all out.
Okay.
Um, so I would say this year, 2024, there's probably been one, two, three, four, probably like four stocks, maybe
Okay.
five, that have actually made it through the whole criteria and I've invested in.
Hmm.
Um, But the thing is, because you're not in such a rush, you don't really need any more than that. You only need like 2 or 3 stocks a year to keep your
Sure.
portfolio topped up. Because like you can buy a stock. Like I had an experience where I had a stock on the scanner, it passed the test, and I was like, I'm going to look into this deeply tomorrow. This looks a good one. And then I woke up the next morning, it had gone up 100%. It's like, ugh. I mean, that doesn't hardly happen, but
Yeah.
it can happen, right? I've had stocks go within a month, and I've had stocks that I'm still holding like 18 months later. So you don't really know when it's going to pop, but you only need a small handful a year to keep your portfolio top. Once you've got that portfolio, you need that many, and you don't, there's not that many floating around. So yeah.
Maverick wants you to know that Bitcoin hit an all-time high at 103,635. So
I've been watching Bitcoin every day.
I'm sure, yeah,
Don't
yeah,
you worry.
yeah. With enthusiasm.
Yes, I mean, so that's funny because obviously crypto goes in cycles, right? So you get the halving, and then you get the bull run, and then you get the winter. So like 2 years ago, 23, 22, obviously went through the winter, and I just delete the app and stop looking. It's like, and
Yeah,
now app comes back out. It's like on my
yeah, yeah.
screen every day.
Once it starts hitting the news again, you're like, okay, let's game on.
Let's keep watching. Yeah, it's
Yeah,
fine.
yeah, yeah. What was the last stock you bought? Maverick has some good questions. Like what stocks have you bought this year?
Well, my best performing stock was a company called CMC Markets PLC, which incidentally is a broker, a
I know who
CFD trading
CMC is.
broker.
Yeah.
Yeah, you've heard of them. So they're a big UK broker, listed obviously. And they were trading, when I found them last year, this is unbelievable, but this is true. The market had sold that business off because they basically released a quarterly earnings report last year in 23, which basically said, we're investing in our product. We're going to expand our product range so we can increase revenues. But because we're spending that money, our profits are going to be down for the next couple of quarters, right?
Mm-hmm.
And all the market saw was that the profits are going to be down for the next couple of
Right.
quarters.
Yeah.
And when I looked at that, the business was selling for less than the cash it had in the bank.
Mm-hmm.
And I was just like, but it never made a loss in the years. It was like, I think you could buy the business for like 250 million. It had 250 million in the bank, and it was making about 70 or 80 million a year in cash profits. It's just like no owner would sell the business for that. So I bought that one, and obviously that's gone up like 200% in the last year. So that was a good example. I'm trying to think of another example. Another one is there's a company called Future Fuel. That was a really good one. That was good because when I found that, again, it was trading for its cash value. But when I bought it, 6 weeks after I bought it, it released a special dividend. And the dividend was about 40, as equivalent to 43% return based on what I paid for it. Because the stock
Nice.
price was so low, the dividend yield was 43%. So I made half my money back just in cash. And then when I looked at it, I mean, this is a good little tip for anyone watching. When I looked at, if you go back and look at that business over the last 8 years, that business isn't going anywhere, right? It's not an Apple or anything like that, but it just generates cash, right? You'd be happy to own it privately. And when I looked, the business just stacks cash on its balance sheet year after year. And then it doesn't know what to do with it, right? It's got no ambitions to grow. So what it does is it then just gives it back to shareholders through special dividends. And if you looked at the last 8 years, the average is about I think it's about 30%, depending on where you buy. But based on current price, it's about 30% yield just from those dividends and special dividends being paid back. But you'd never find, you never see that from a scanner you have to kind of dig into that. But that was a really interesting stock that I bought this year. I bought that in February.
Cool.
Obviously, I made my 40%. I mean, then it's paid a normal dividend. I'm probably up about 50% on that just in cash, and I'm still holding that one. I'm kind of in two minds whether to just keep holding that one. But yeah, there's a couple of examples.
You've brought up dividends a few times. Does that come into is that just like a happy surprise afterwards, or is it part of your screening? Like
It's a happy surprise.
okay,
I
a
mean, like if
happy
it's
accident is
yeah,
built raw. Oh, who is it? Oh, you know him, the painter guy. Oh, Bob Ross. A
okay.
happy accident is what he would say.
Okay, yeah.
Yeah, yeah.
So it's a happy accident. Like I've got stocks that don't pay any dividends. That's fine because the price is low. But one of my criteria is I look at something called average yield. So I'm like, if I bought this business whole based on this price, and I then go and add up how much the company's paid to shareholders over the last 5 or 6 years, paying this now new low price versus that yield, what's my yield if it gets back to the normal?
Mm-hmm.
And so that's one of my criteria. Is it's cheap. So if I can find businesses that are paying like 20-30% yield, right? They've got to get back. They've got issues. They've got to get back. But that's a good that's one good indicator of a cheap stock, basically the one that's got a really, really high dividend yield.
Right.
So I do look at it, but I don't care if the business doesn't pay dividends. It's not like a
It's
deal
not a
breaker.
deal breaker for you.
Yeah.
For sure.
Right.
Okay. Do you okay. Here's a very, very serious question. Are you hoping Santa Claus brings you anything in particular this year?
A rally. The Santa
A
Claus rally.
market Santa Claus
Yeah.
rally.
If he brings his Santa Claus rally, that's all I need,
We actually did a bit of a poll in the room. I can't remember what the results were, but it seems like most people are expecting a little bit of a Santa Claus rally. Would you say that you're also expecting a Santa Claus rally?
I mean, I'm seeing it right now, right? So I look at my
Mhm.
Bitcoin, that's flying. I look at the stocks are up.
Yeah,
Like it
and high
feels like
dividend.
we're in a Santa Claus rally, honestly.
Mhm.
And I don't really see any reason. It's only what 2 or 3 weeks to go. I don't really see any reason for that to kind of stop. So
Sure.
yeah, I'll probably sound pretty optimistic about that. Yeah.
Do you do seasonal patterns and stuff like that affect your decision making at all? Aside from fun, let me actually rephrase that because I want to broaden my question after I asked it.
Sure.
But like, aside from fundamentals, would you say that there's anything that goes into the decision making process, or is it purely? Is there any news? Is there any seasonality? Is there, hey, I like this stock because it happens to be in this industry? Anything else other than just the pure, this is way below book value?
Um, no, not
Okay.
really. No, because I basically like I don't think I'm that smart, honestly, right? So I
Hmm.
just try and avoid any scenario. I'm trying to predict what's going to happen next. So
Gotcha.
like with things like the market and timing and patterns, you kind of always trying to hope that something's going to happen in the future.
Hmm.
Um, whereas I'm just like, you know what, this thing I've got here is worth way more than I've paid, and as long as that remains the case, that's fine for me. I'm not going to worry about it too much. Um, yeah, so but I do believe in the Santa Claus rally. I mean, I've had a few of
For sure.
those.
Yeah, yeah, yeah.
You know,
Or election bullish year, or it's going to be. Yeah, there's definitely things that you can look
yeah,
back. And say, hey,
I,
this happens. They're seasonal. Retails are likely to go up because it's Christmas time and people are buying from retail, right? So
yeah,
yeah, there's definitely stuff that. Do you? I think I just lost that question. I think
it's
it
a
just.
good question. Get it back.
Let's see. What do you do? So, how much of your time would you say on an average week do you spend? We talked about finding stocks and kind of managing the portfolio. How much time do you take kind of looking at the markets? How much of your day goes into that?
Probably like an hour a day. Not much, to be
Okay,
fair, because
that's
once you're
fine.
on top of it, you kind of you've got your stocks that you're holding. You're building a watch list of opportunities. So when you cash a stock out, you want to have one ready to come in, right? Because you want to
Hmm.
put your money to work. So um, you've always got like a handful of stocks that are kind of ready to switch in when I'm cashing out. Another curious thing that does happen is, so obviously, for example, a stock could go up like 200 or 300%, right? So if you've got room for 20 stocks in your portfolio, let's say you put 5% or 10% of your money into one, but then that goes up 200 or 300%. So what happens is then you've got room for one stock, but you've got the cash for like 3 or 4 stocks.
Hmm.
And that's quite an interesting dynamic because then you've got to figure out what to do with the excess capital. So, like I say, I mean, I'll just sprinkle that back in amongst what the existing stocks are. But yeah, it's like an interesting, it's a nice problem to have, but it's very different from the days when I was just trading FX. Let's put it that way.
Cool. I remember my question.
Oh, man.
I mean, there's a comment. Here's kind of just, I wanted to get a thought from you on this. There's a common adage that says, hey, I look at technicals. A lot of technical traders will say, hey, I look at technicals because the fundamentals are already, in my opinion, built into the chart. It sounds like what you're doing works really, really well. Do you have a statement to kind of counter that adage?
I mean, yeah, it's just like if you spend like a few moments looking, right, you will see things that are objectively mispriced. Like you can find a business that's never had a losing year
Hmm.
that's that you can buy for less than the money it has in the bank. So you can literally buy dollars for like 60 cents and you get all the assets, the buildings, the plant machinery for free. You get all the future profits for free. Like objectively, that is, I mean, that's not priced correctly. If you go and phone up the bank, right? You phone up
Mhm.
Chase or HSBC and you say, I want to get a loan and buy this business because I can buy the business at this price and then I can pay you back tomorrow because the business has got more cash in the bank than I need to buy it.
Mhm.
If you go and do that, that won't happen in the real world.
Sure.
Either the price will go up, like it won't
Yeah,
last.
it makes
It's not
sense.
sustainable. It's not realistic. So that's
Mhm.
kind of my counter to that. You can just go and look for those
Yeah,
things, and it's objective.
it's a great answer. It's a
Yeah.
great answer. Um, let's see. Okay. What if you're talking to somebody that's, hey, I'm gonna go start trading stocks. I'm going to go buy stocks right now. I'm really excited. My uncle just gave me 30 grand or whatever it might be. What is the one piece of advice, or you could give a couple? What advice would you have for that person that, let's say, is totally green?
I would say just try and keep it as rational as possible. So whatever you're going to buy, you understand why you're buying it, and not just because you hope it might go up, the price might go up. Does it isn't a rational answer? Just understand what you're buying and how much you're paying for that thing, and is it worth the price that you're paying based on what you're going to get? And try and view yourself as buying like if it's a stock. So don't just think I'm going to buy shares in Nvidia. Think
Mm-hmm.
I'm going to buy Nvidia, the whole business. I'm going to own that business. It's going to be mine. So I'm going to pay 3 or 4 trillion, and then Nvidia is paying me what 50 billion a year. Like, is that rational, right? And do you believe that you're going to make however much you pay, whatever the market cap is? Do you feel confident that you're going to make that back from that business? That would be my first piece of advice. Try and keep it as rational as possible, um, because obviously that's going to give you conviction to hold the position if the stock price doesn't go the way you think it's going to go. And then what else would I say in terms of advice to someone just starting out? I would say that the second piece of advice would be focus on not losing money, right? Because this is going to sound weird, but if you buy things where you can't lose money, so for example, a business trading at 25% the value of its cash, for example, right? And assuming that the business is healthy and it's not going bankrupt and all that. If you buy a mediocre business that's going to keep trundling along for 10 years at like way below the value of its cash, it's difficult to lose money on that, right? If you buy a
Mm-hmm.
group of those, it's very, very, very hard to lose money on that. And if you focus on restricting your downside, the upside really takes care of itself.
Right.
So those would be my two pieces of
That makes
advice.
sense. You're when you buy a stock, if you look at any type of a time frame that's more than a couple years, it's usually higher. Well, there was an exception though.
Yeah, right.
um, Maverick wants to know: do you have an example of a stock right now that's undervalued and at a buy point?
Well, the stock I talked about earlier, Future Fuel Corporation,
Uh-huh.
that's a low. That's at a price. That's at a low price. I think you can get that stock for roughly 200 million. You can buy that business for about 200 million. I think it's got 150 million cash in the bank. It's just paid its dividend. Actually, you just missed that. But that's a low price stock. I'm trying to think of another one. Uh, there's a stock called Sylvania Platinum Metals. That's really cheap right now, based on its historical earnings. Trying to think of another one. Travago, you might have heard of that one. It's a US
I know
listed European
Trivago. Yeah,
company.
yeah, yeah.
Travago is trading. I mean, it's rallied a little bit recently, but it's still trading at well below what its intrinsic value is. It's trading roughly at about the value of its cash. That's a
Okay.
big, huge brand. That's basically trading as if it's going to die, but it's
Mhm.
Travago. Like it's a huge brand. It's probably going to be around for another 10 years. Yeah, there's just a few. If you start looking, there's lots around, basically.
Yeah, they're everywhere. Let
Yeah.
Let me ask you, what do you do for what do you do to kind of what kind of hobbies do you have? What do you have do to blow off steam?
So I like to run. I go running quite a lot.
Okay. Are
Um,
you a distance runner or a speed runner?
yeah, distance runner. So I do a bit of both because I think speed helps me play sports. 'Cause I also play badminton, squash, and football, soccer.
Okay.
So I do speed running to keep myself fit for that, but I do a lot. I prefer the distance running. I really enjoy that, and that's 50-50. Like 50% is just mental. Like I
Mhm.
just like to go out and through the forest or out into the countryside where there's no one around, and just run in nature. And
Do
it's
you
just
run
really
any
good for like.
marathons or I like have you done any like races before?
I
Like have
haven't
you
done races, no, but I probably the most I've done is about probably 20 miles.
Okay.
Um,
I think a
so
marathon is 23.2 or something. So
what's that? Sorry.
almost there. I think a marathon here in the States is
26.
26. Yeah.
26 miles, yeah.
Yeah.
So not quite. Not quite a marathon. I do a half marathon quite comfortably.
Okay.
Yeah, I usually do like between 5 and 15 miles,
All right.
basically, when I go out. Depending on the weather, which is not very good right now. Well, it's never very good in the UK, but yeah.
Yeah. Very rainy in the UK. Every
If
time
you like rain,
I
it's the
swear,
perfect
every time
place.
I've been to the UK, it's raining.
Well, let me assure you, it's always raining. It's not just when you came to the UK.
Last question. This is a new question. What is a good question that I should ask our next guest?
I mean, who's your next guest?
Let's see. Our next guest is John and Jack Asbury. They run a company called Asbury Research, and they're going to be on next week.
I always find it really interesting to understand like the reason why people are running the business they're in. I always find that story really interesting. Like why are you doing the thing that you're doing right now, basically? Because I think there's so many, they're so random as well. Like a lot of it isn't even choice. Like you kind of have the skills and the experience you've got, and you end up in a place, and it's like that's a really interesting question. Well, I find the answer to those questions quite interesting.
Cool. That's what I'll ask. Why are you running the business that you're running right now? I think
it's just you know what? It's a process of doing things to make money, whilst trying to get to a place where you really want to be, right? So for my first business, I was commercial cleaning, and I did that because that's all I knew how to. I didn't have any skills or knowledge because I was only really young, but I knew I could clean stuff, right? And that kind of grew. And then once I could sell that, then that got me to a stepping stone to something I really wanted to do, which is of course working online and investing. And then, FX was that. And then you kind of go, okay, I love what this concept, but now I want to do something a bit more relaxed, a bit more passive. And then you kind of go into the business side, and it's just like a stepping stone to, you kind of do what you have to do, but you're also trying to get to where you want to be. I think that's the story for everyone, isn't it, really, I guess? But yeah, I find that quite interesting.
JarrattDavis.com for if you have a business you want to sell Jarratt.
Yeah. If you're in the UK, you want to sell a business, great. If you want to do the managed accounts, everyone's welcome for that.
That's another, just kind of while we're just final question. Is most of the investments that you have from the UK, are they mostly invested in US stocks? Are they England-based stocks? Like, where are most of kind of the stocks that you buy?
Wherever it's cheap, global, like anywhere. Okay. I've got US stocks, got UK stocks, got Italian stocks, I've got German stocks, Japanese stocks. The only thing I don't do is I don't put my money into like markets that are like non-democratic. So I avoid Chinese. So at the moment, Chinese stocks are really cheap, but I just feel like there's something a bit off-putting about a capitalist putting their money into a communist ecosystem. I avoid Chinese.
Even when the Chinese was doing well, I always kind of felt like they're overly manipulated, if that makes sense. So,
well, I mean, I was researching a stock earlier in the year, and it looked really good. And then I was researching it, and it was owned by the Chinese Communist Party. And I was just like, I just don't want to trust my capital there, basically. For a long-term play.
Yeah, especially if you're holding on to it for 3 years. So
yeah.
Well, okay. I want to say thank you. I know you've got I want to say, I hope you have a great holiday. Thank you for
too.
joining us. And I need to get my tree up. You've inspired me.
You do. You need to get going. It's almost Christmas.
I know, right? I can't believe how fast it's going to be here. So
yeah, it's already a weekend.
All right, if you're watching this, I hope you've got your tree up. Or, happy holidays, whether it's Christmas or Hanukkah or whatever it might be. I hope you have a good holiday season. Thank you very much for joining us, Jarratt.
Cheers, Jeff. Thanks for having me.
All right. Thanks, everybody.